Welcome back, traders. My name is Manuel Fonseca. Welcome to Smart Habits. In today's video, we're gonna see what is a confirmation, what are the 3 steps you have to bear in mind to do a confirmation or to follow a confirmation in the market, and also I'm gonna give you some examples of how it works. Okay, no more to say, my friends. Let's go and see the video you came here to watch. All right, now we're gonna see the concept foundation. What is a confirmation? In few words, confirmation is just a candle pattern that we need to find in a point of interest zone. Now, to understand this, we have to understand previously the other concepts that we just have right here. So the first one is point of interest, which I have already made a video explaining this concept. Now, the point of interest are the areas where where we expect the price to react. Remember that the point of interest mostly are compounded by order blocks or imbalances that are located in certain zones of the market. And once we spot them, there is a probability of reaction. So there is where we're gonna try to find these confirmations. Now, another concept, this is not that new, but we talked about this in the video in which we talk about the market direction. So that one of the first videos, that is the structure shift. And here we will have the concept of a break of structure boss within the POI. So we will expect a boss within this point of interest. Okay. Also, in this smart money concept strategy, you will find a concept that is called change of character or touch, right? But personally, I don't use it because I found a break of structure stronger in terms of confirmation. Okay, and then the next concept we're gonna try to find is a liquidity sweep. Again, we have a video explaining the liquidity in full detail, but liquidity sweep is that the price takes the liquidity before reacting. And these are like the 3 parameters we will need to comprehend in those areas, in those zones, to find a proper confirmation. Now, let's go to this draw we have here. So let's imagine this is very clear. This is a bullish trend, correct? Now, as we have seen in the previous videos, we understand that this is the beginning of a range because we have here a liquidity sweep right here. So all the liquidity of the lows is being taken. It creates our swing high, and then it creates our it creates the swing low, and then it creates our swing high. Now, from the swing high, the liquidity is taken. This liquidity of these lows is taken, so that liquidity is taken. And then after that, we have a break of a structure with body of a candle, and then is when we have our boss. It means that we have the beginning of a range. We already know that because we have learned that in our class of range beginning or strong high or market structure, right? Excellent. After that, what is the next step we have to do? We just start taking into account the order blocks and liquidity. Both at the same time. How we do that? Order blocks, remember that the order blocks in this example, which is bullish, we will take into account the first bearish candle. We're gonna imagine that is here because this is just an example. So here we'll find our point of interest. Okay, this will be our point of interest, and this will be an order block. Let's imagine we are in 1 hour time frame. In 1 hour, right? This is the 1 hour time. Perfect. Now, where is possible or where is likely we have another order block? Another possibility of having an order block could be in this point here. And you will ask me, why, Manuel? Why is there an order block? Remember that the order blocks occur when there is a break of the structure. So if you follow the image here, we have here some patterns of candles, and then we have here a break of structure. So after this boss, we will find here a break on an order block, another order block. Okay, so this will be another order, which in other words is a point of interest, correct? Is a point of interest. Excellent. With this, we already spot our order blocks or point of interest. Now, I need to say this, guys, but we're gonna see this in detail in further classes, that or further videos, that not all the order blocks are correct. In fact, there are some, let's say, false order blocks that are created, very evident order blocks that are created in the market to make us confused about this concept. Okay, but as I said before, in later videos I'm gonna explain to you what are those who works the best. Okay, taking into account our strategy. Right now we have this now we have 2 point of interests right here. We already know that we are in a bullish trend because we are seeing that the highs are weak highs. It means that there are likely possibility or is a great probability that these highs get broken because we're in a bullish trend. All right. So we already have this. We already spot the market structure bullish. Then we find out our point of interest, right? And now we have to find our liquidity areas. Now, liquidity areas, as you remembered well, are those areas where the price is likely to have lots of orders. Okay, so remember that we said as well that the liquidity is mostly under the lows or over the highs in the market. So if we keep going on with our example and the price is going down here, yes, we have a point of interest here, but there is also a great percentage of other traders are seeing this as a double bottom opportunity, right? Because people who follow support and resistance zones or basic concepts on trading, they expecting here a double bottom pattern. They are expecting for the price to get to this area, and then the price continue with the bullish trend because this is super evident for everybody who's executing orders in the market. So when you find this, it means that this low becomes liquidity. Okay, it's a liquidity pool. Okay, of course, not always is like that. But now, what are we gonna do here? Now we already have the direction, the point of interest, and we already spot the liquidity. Remember that, as we said before, in this low, because there's a lot of people waiting for the price to get to this area. So there is a lot of money accumulated. Now here is where the confirmations take a great place and take a lot of importance in our strategy, because since we already have 2 point of interest, one that is here and another that is here, we will wait patiently for the price to do our confirmation patterns just in this area. And this is how we differentiate from the other traders. Other traders just execute order based on strategies that probably they don't have properly designed, right? Or emotionally. So if they see a small reaction in the market, for example, here the price pushes a little bit up, an emotional trader, which I was one of those, I execute orders here. So I start buying here because I see the market is going up. And then when I saw the price going towards my direction or towards my stop loss, then I close the order and then I start suffering anxiety or a lot of emotional stress because of this. And it's normal if you're in these beginner phases, which everybody, I think, in certain moment lived, right? So now let's talk about what are we gonna do once the price hit our point of interest. Okay, now we have spot the real market direction, the order blocks, and the liquidity on the market is our time to find or confirmations. So why do we have to take into account? Let's see. Just before we continue with our explanation of today's video, guys, let me remind you that in the link of this video, you will find my Simplify Smart Habit Blueprint, which is an ebook in which I explain in 5 different phases my strategy. So for each phase, I have already developed a video in which I explain each phase, so you can read the ebook. It's really easy to read, and also the videos are there for you to follow. So if you like to continue or improve your trading skills and abilities, and you like the way I'm explaining this to you, I kindly suggest you to just find this ebook, read it, put it into practice, make your own assumptions, and of course, study this material. Today's video is about the phase 4, the confirmation. So if you haven't seen the previous videos, I kindly invite you to watch them. Now, let's continue with explanation of today's video. Now we're gonna see the 3-step confirmation process to find a proper confirmation in the market. Imagine that this is our point of interest. Remember that the point of interest is mostly an order block, right? Or an imbalance. In this example, we're gonna put 1 hour order block, 1 hour imbalance, okay? After we spot those areas, there is where we're gonna find or confirmation. So it is in 3 steps. Step number 1, liquidity sweep. Liquidity sweep, guys, for those that do not know the concept of liquidity sweep, is that when the price gets to this area, to a point of interest, and creates liquidity. What is the meaning of liquidity? Lows or highs, it depending on the example. Because we're doing a bullish example, it will make lows, right? So the idea in this example of a bullish example is that the price take the liquidity of lows that they made or they make in this point of interest area. Okay, now the price reaches to this point of interest area, has certain reaction. There is not a liquidity sweep yet. So how you can spot it? Once the price has a reaction, you need to see the first low that is created, or the lowest low. In this case would be this one, right? Here, most of the traders that are not properly trained, like me in a certain moment of my trading life, right? We start feeling kind of anxiety or FOMO, because once the price get to this area and start reacting towards the direction we're expecting the price move, we pull the trigger very easily, right? But we need to be patient, because this is the first step, liquidity sweep. Now, once we spot the low, we patiently we're gonna wait for the price to do the next, which is this. Okay, so the price took the liquidity of this low, right? Is within the order block, within the point of interest, and once we got this is the first step. Okay, this is the first step, liquidity sweep. All right, I think this is very clear. Okay, liquidity is being taken. Perfect. Now after this, what are we gonna do? Then it comes the step number 2, which is an structure shift, which is called break of structure or touch. Touch is called change of character, right? Now, if you follow all other traders who does this smart money concept strategy like me, some of them explain that in the confirmation area, you can wait for a touch or change of character that is mostly made by a candle wick. Okay, so you can execute any order here, and for example, the price just make a candle wick. That's it. With the candle wick, they make this. They take the liquidity of the nearest high. So once the price make this is called a touch, change of character. That, in other words, is like the price is giving you certain hint that it would like to change. But for me personally, is not enough. Those change of character are made to take liquidity, because of course it's taking the liquidity of these highs, but also for make us get confused, us, the retail traders. So from my point of view, I always use for confirmations break of structures. Why break of structures? Because break of structures for me shows a strong intention from the buyers in this example to continue with that movement. All right, so I always wait for a boss. And what is the difference between a touch and a boss, Manuel? That the boss is made with the body of a candle, correct? The previous one, the change of character, the touch, was made by a candle wick. But in this case, we will wait for a body of a candle. When the closest high after the liquidity is taken is broken by a body of a candle, it means that we have confirmed the second step, which is a structure shift with a buffs, break of structure, right? Body of a candle. Please do not forget this. The boss is with a body of a candle. Then we're gonna see in today's video what are those common mistakes we made. I made a lot, right? When I was learning this concept of confirmations, right? Now, once we got this, we can go to the step number 3, which is the mitigation point of entry or trigger. So we have already got the first 2 steps. Step number 1, liquidity has been taken. Step number 2, we have a break of structure or boss here. And now here's when we actually execute the order. And it is that we will find here after the break of structure 2 things. We could find either an imbalance or an order block in 5 minutes, okay? Because this is something I completely forgot while I was explaining this, and it is that the confirmation process, once the price gets to our point of interest in 1 hour, we're gonna go, let's say, down in time frame, and we're gonna find a 5 minutes time frame. Okay, in this 5 minutes time frame is where we're gonna see the liquidity sweep, then the break of a structure, and then the entry trigger or the order blocks that I'm asking you to find, right? So remember that after a break of structure, if you have done enough exercises finding strong highs and strong lows, you would understand that after doing this exercise, there is likely to see a lot of order blocks here or imbalances. Okay, those imbalances and these order blocks that you will find here will be our entry point, right? Or where we're gonna execute of order. So here is where we put a proper order. In this example, a bullish order, right? Here it is. And this is a confirmation, okay? This is a confirmation. This is the step number 3, a mitigation point. So when it says mitigation, when the price mitigates something, it's just like the price just let these areas that are not properly balanced, or let's say here's money accumulated, the price just get to these areas because we have a boss, we have a bullish trend in 1 hour, we have a point of interest, and now we have a confirmation. This is a proper order execution, right? We're not just putting orders emotionally or wasting our money in the market. No. We're just actually following a proper step-by-step process or trading strategy. And this is the difference between those traders, like I was in the very beginning, that trade with not very clear strategies or emotionally, and the professional ones, or those who are going in a professional or successful road, let's say, which is you that are following this pieces of advice. Okay, so this is where we're gonna look. Okay, so as a summary, once we got the point of interest in 1 hour, we go down to 5 minutes time frame. Here we're gonna wait for a liquidity sweep, which is this one. So these lows are the money is taken of these lows. Then we're gonna wait for a break of structure, a bust with a body of a candle. Remember, with a body of the candle that shows a really clear intention of keep pushing up the price. And then we will wait for the mitigation or point entry, which is where the order blocks and the imbalances are, and where we execute an order. You can either wait for the price and execute the order in the market in the moment, or you just can put a buy limit order and that's it. Sorry for interrupt you guys. If you are enjoying this and you find it valuable, this information I'm trying to explain to you here, I kindly suggest you to subscribe to my channel. We're just creating a small community, and I just want to share all that I have learned in these years of trading with you to avoid you commit or made the same mistakes I made, because that when the time passes and you realize that you still don't have the results you wish you will have, it becomes a kind of a burden. But my job here and is just to provide you this information, give you a guide of how to make that way shorten. It's not a shortcut, but it is like the real step-by-step process that you should follow. Okay, so please follow me in my social media and subscribe to the channel. Let's continue with the video. Now let's talk about something very interesting, which is called the most common mistakes in confirmation. Okay, so imagine the next. There is a trader out there in the world, right, which knows the concept of order blocks and market structure. So this person can see that this is a bullish trend and that we have here a point of interest. Okay, but this person doesn't know, okay, what is a confirmation, okay, or probably he doesn't have or she doesn't have clear the concept of liquidity. So she or he cannot see this big liquidity pool. So she or he is likely to commit make the first mistake, which is called entering after just one reaction candle. So as I said before, when the price get to this area, because here is a lot of money, you will see a huge reaction. The price will move. Definitely the price will move. Okay, so if you are a scalper trader and you see candles going towards the direction you're expecting to buy or to follow, you will jump and you're gonna pull the trigger, right? What is the problem with this type of reaction? There is no confirmation, right? And especially in these areas where is a lot of liquidity here accumulated, there is a great chance of losing the trade, because the price will push towards the direction of the market like an bullish trend, but this is just to grab more traders or make more traders, impatient traders especially, to pull the trigger. The price is push them to to pull the trigger. Not the price, but you know what I mean. It's like people are just executing plenty of orders. So I just put here one, but here is millions of traders executing buy orders right here. So there's one, two, and imagine how many lot size are accumulated here, right? And there's also people who are executing orders with desperation, and they do not wait for this. So what happened after this common mistake, or common mistake number one? They pull, I mean, the price make them or trap them, right? The price trap them. They execute the order, the price gives them a little bit of joy, as I said before, and then boom, it goes down and takes what? The liquidity that was actually here. So haven't you been, or can you relate to the next? You put an order here, then the price, take your stop loss, and then the price with a huge candle or a really aggressive movement goes to the direction you were expecting. Why that happened? Because there is more information that probably you didn't see. Okay, so this is the mistake number one, entering after just one reaction. Okay, perfect. What is another mistake that we will find here? So the second mistake is ignoring liquidity sweep. So you already know that in this area we will have to wait for a liquidity sweep, but sometimes the price just do the next, and look how tricky it could be. We're gonna imagine for a second, right? Ideally, this is the scenario. We're just gonna wait so the price takes the liquidity, make the boss, and then we can enter properly. But you will find scenarios in the market that you need to be able to face, okay, in which the price in 5 minutes do the next, goes to the liquidity area, right, and then makes the next. So if you see the next, some people ignores the liquidity taking, right? So this liquidity is ignored for most of the people. Why? Because they think that that liquidity is not necessary. It's not necessary at the end. It's not necessary. So they again jump the trigger. What is this common mistakes makes you to execute orders without a confirmation. So they do not wait for this pattern, for this liquidity to be taken. They just wait for the price to get to the area. Okay, something like this. That the price get to this area here, here, here. They think here is where you start like buying orders, buying, right? Buying. As I said before, the first step is wait for the liquidity is crap. So the lowest low is taken, right, by the price. Sometimes the price push up, and people start feeling anxious, and then what happened? Boom, takes the liquidity in the area and keep pushing up. But you already lost your account, for example. Right? So that's the mistake number two. And I'm giving you this just to bear this in mind. Do not make those mistakes, which I already made. All right? All right. And now we're going to go to the mistake number three, which is misreading the chart and boss. So personally, from my point of view, with the strategy I've been working with, for me, misreading a chart or a boss is, misreading a confirmation. It's when you do not wait for the body of the candle to break the boss or to make the boss, okay? Or something like this. Let's see. So I always gonna let this because this is the ideal scenario, right? But this is an example of misreading the boss. There is a lot of examples, but I'm just gonna give one of the most common. I commit myself to show more examples in further videos, okay? So sometimes the price makes a liquidity sweep not inside the order block or the point or the point of interested area. Sometimes it makes the liquidity taken above of it, right? Or outside of this point. So when you see this huge candle, the price has the reaction. And then you see this boss, all right? So people see here the boss, the break of structure. So they say, oh, great, we have our liquidity taken, right? The liquidity has been done. And now we have a boss. What is the meaning of that? This order block, in this order block, we're going to execute of order. Isn't that right? Unfortunately, it's not, my friends, because remember that to make the boss of break of structure is not of this high. Is from the high that causes the liquidity taken, right? Like in this example, look, this is the closest high after the liquidity is taken. After the liquidity is taken here. And after this, we wait for a boss break of structure. So in this scenario, the correct boss should be here, not right here. This is a boss. Yes, but it's not the boss, the breakup structure we're waiting for. It's not a pattern of confirmation. This is just made for make us get confused, right? And what happened after that? People consider that this is a correct confirmation, then the price enters, a little bit of joy, continue with the downtrend, right? We are misreading the market or misreading a confirmation. Another misreading example could be the next. We are in the same spot, the same situation. Now, then the market makes the next movement, and you see, oh gosh, look, that was a huge candle, and now we have a boss. Isn't that right? No, it's not right, right? Because we need is a body of a candle, not the candle wick, the body of the candle. So if the candle just gets to this point, let's see here, there is no boss. There is no boss, my friends. And what is likely to happen? I know you have seen this before. So we see here a nice red candle that enters in our point of interest or in your. This is not a confirmation, remember, because here is no boss. So this is a no boss, right? This is a no boss. And what happened after this? Again, provide us a little bit of joy. Can you relate to this scenario? I can tell because I have lived this many times. And as many times you suffer this, because I say suffer because the correct word is saying suffer. We suffer when we lose money, right? And psychologically, that affects us that much, too much, that make us think we're not doing things properly. So look at the nets, my friends. So imagine that in this example we have been creating, we have here a boss, sorry, not a boss. We have here a point of interest, and here we do not have a confirmation. Let's imagine that here we have this example of confirmation. This. Now, if you see that the market makes this, is this a confirmation? It's not a confirmation. So what you have to do, if the price gets to this area, makes a pseudo confirmation, kind of a confirmation, not a clear confirmation. What is our next step? Correct. We have to wait. Yeah, we have to wait for the price to do whatever it needs to do. It could do here the confirmation later, or it could simply go down, react in an imbalance, and keep pushing up, or get to our order block area here and keep pushing up. Yeah, in both scenarios, either the imbalance here or either the order block, we will wait for a confirmation pattern as well. Okay, so for those who doesn't know what I'm talking about the confirmation is this. Sorry, the imbalance is this. So that the price, sometimes there are some gaps in the market and we don't understand why the price is like randomly just reacting. It's because it sometimes gets to these imbalance areas. All right, so the price took the liquidity of these lows that are here, this one and yeah, this one here. And since it takes the liquidity, enters here in the imbalance and keep pushing with the proper real direction. Meanwhile, the other guys who unfortunately put the orders here and execute orders because of FOMO, because they don't have the correct information, because they were too anxious. Again, it's not because I'm just judging them. No, just because I lived that. It's like I'm just making a reflection about my previous mistakes, right? And showing you what I have done. So I put plenty of orders here, try to recover in some of the losses I got, and then boom, result, I have lost my account. Result, I cannot follow the price, the real price direction, and then I feel miserable because the price actually did what I was waiting for the price to do. All right, please bear in mind this information, my friends. I think this is actually very interesting for you to understand how this works. And now I'm gonna show you one example in the market about a confirmation and how a correct confirmation looks like. And with this, we're gonna finish our video. Perfect, guys. Now, let's see an example. Here, we can put into practice everything we have covered so far in our first videos. So let's do the next. We're gonna find a very obvious, this obvious low is our strong low because we're in a bullish trend. Now, after this low, we're gonna find our breakout structure. Our first breakout structure is right here. Perfect. This is the breakout structure, right? Why is it the breakout structure? Why is it? Because this is the closest high, right? After the liquidity taken. What is the liquidity taken? Right here. Look, this low was here, then the liquidity was taken by the price. Perfect. And after that, we will wait for the price to make the boss breakout structure. Would this be considered a boss? Yes. Look, it took the liquidity with the body of the candle. Not as clear as I wish it would be, but still it is. Correct? All right. After this confirmation, we will determine that all of this, all the continued highs that we'll find here. So this high, for example, is a weak high, and which means that it's likely to be broken, and it was. then the next high also was broken, and then the next high. Perfect. Now, can we determine that an end of a range? If you remember that, can we determine that? How can we determine that? When we find kind of a similar pattern that we found here, but at the end of the movement. So look, we have here a liquidity taken, which is right here. So this previous high or bust became liquidity, and then this low, which is the closest low where the price took the liquidity. So this low, from this low, the liquidity was taken of this high, and then after that price movement, boom, break of structure, bust. This is actually very similar as the example we have got today. Okay, now we have the correct market direction in 1 hour time frame, and this is a bullish trend. Very obvious, right? Now, what are we gonna find here? Our order blocks. Or order blocks are in our point of interests, right? Now you say, all right, Manuel, you have told us that mostly at the beginning of the range there are order blocks. And if you can see here, the order blocks, you can see this red candle, which is a bearish candle, could be our first order block, right? Now you say, Manuel, look, this is mitigated because it entered here. It could be. So we could take into account this order block and this order block as well, right? But then you say, look, Manuel, but it's actually very far from the current price. For the current price, look where the price are. And you're right. Remember that when I said in the order block or point of interest video, I said that once you find a pause or after break of structure, we would look for the closest candle, okay, that was against of movement, and that would be our order block. So I'm gonna say it again. The candle that goes against of movement prior the break of structure, that is or point of interest. So this would be your point of interest right here. Okay, all of this, you say, but look, Manuel, like all of that candle, this candle, was mitigated. The price re-enter here. That's why the price re-enter here and keep pushing up. Yes, guys, you are completely correct. If you find out that, it's amazing. That's perfect. But now we're mixing here. We're just now combining all the concepts we have seen in these videos so far. Now, did you remember the video of liquidity? I hope you have remembered that, because remember that I said to you that liquidity is where the money is located, right? So if you see this low, you are not the only one who saw that, right? So plenty of people had spot that low many times. Many moments ago. Allow me if that is correct to say or not, right? And now this becomes huge liquidity pool, right? This low where the order block is located becomes a enormous liquidity pool. So here is a lot of money because plenty of people are looking to this low, right? And many people are expecting there to have a double bottom pattern here, because remember, it's a bullish trend, so people is waiting here to buy, right? And I imagine you as well. And then you say, okay, this information you provided us is not good enough because this order block doesn't work, right, guys? So remember that when we said liquidity, we will avoid it. So if I see that this is my order block, but actually I see that this order block has plenty of liquidity, we will wait for two things. We will find the closest order block after this liquidity pool. So the closest order block, can you see it? Is this one right here. Perfect. So this is the order block, right? I like this order block much more. Why? Because once the price took the money of all the people that are executing orders here, here's where you're gonna be ready to take the opportunity to buy. Okay, now putting into practice what we just have said, what we're gonna do now is, this could be a possible point of reaction, yes, but what will determine this become a point of reaction? What we're seeing all the video, confirmation, the confirmation. That's right. So if we see here a confirmation pattern, there is likely possibilities to put an order here, because if the trading plan says that we should do it, we just have to do it. Otherwise, we will wait to get to the next point of interest, which will be this one, and then we're gonna execute our orders. Okay. Also remember that in our video about order blocks, I said there are order blocks. Not all the order blocks are valid in the market, right? And in further videos, I will explain which are those, okay? And this is one of those examples. Now, Let's continue. Perfect, guys. Now we have already spot our trend line, which is bullish, right? We have already spot our point of interest, okay, or order blocks, which are right here. And here is also an order block plus an imbalance. For those who didn't know what I did here, was an imbalance. And we also have found that here's the liquidity. Perfect. Next step, let's find a confirmation, right? Remember that people who are impatient enough, they put an order here, just and put a stop loss here close to the low, and they are already out of the market, right? You're not those people. You will wait for the steps for the confirmation, which is liquidity sweep, structure shift, which is a boss, not a judge, a boss, and then mitigation point. All right, let's go. So once you are in 1 hour, you go down to 5 minutes, and in 5 minutes we find here, and here's when we have to find our beautiful pattern of confirmation. Give me a sec, because I'm just gonna grab here our rules to find a proper confirmation. Okay, all right, now let's see what will happen. Let's see if the price shows us a possibility. All right, so once the price enter here, we can find the lows. So this candle, you see here, this candle, the one I'm pointing here, this could be a low, right? But the price just mitigated and keep pushing down. So far the liquidity has been done. Yes, we need a structured shift. Where is the closest high? What is the closest high? Would it be this candle? It's not. This is not a. This need to be very clear, guys. Remember that the mistake number 3 I mentioned was that people misread this, but you need to see this clearly. So the closest high is this one. And you will say, Manuel, that's actually very far from the price. Yeah, it is, but it's not what you want to see. It's what the market is showing you, right? Let's see. Let's continue. Let's keep going here. Let's go going here. All right. Look, there is. Oh, here we can find a liquidity sweep. Now this was the lowest low. Now the liquidity was done, and here we will have the closest high. Perfect. So what it means, step number 1, liquidity sweep, we already have it. Gonna delete this, sorry guys. The liquidity sweep is done here, and then we're gonna wait for a structured shift. Here is a structured shift, not yet. As I told before, the price sometimes make this. This will be considered a change of character. But remember, we do not follow change of character. We follow break of structures. Right now, let's see what else is happening here. That's it. Is that a confirmation? Is that a confirmation, guys? Would like to ask you, is that a confirmation? Do we have a buzz here? Do we have a break with a body of a candle? Right. So some people would jump I would put the order right here. As soon as immediately they see this, they start, oh yeah, it's a change of character. Let's put the order right here. Now, okay, now you know what happened with those people, which was me in the past. Then they see this reaction, they see, oh yes, it's working. Let's put another order here. Can I kindly ask you another question? Is there a confirmation? Clear confirmation? The answer is no, right? So why do you keep executing orders emotionally? Then you see, okay, now that some participants are out of the market, we will wait for this area. Now look, the price get not to the order block, but to the imbalance in 1 hour. And again, we will wait here for a liquidity, which is this is the liquidity sweep. Oh my gosh, what are the rules? Now we're gonna wait for a structure shift. Remember that we will wait here for the closest high, or the string high, which is right here. So this is the closest high. So once the price break this with the body of the candle, that will be a confirmation. Beautiful confirmation, right? Here is a beautiful confirmation. And what is the next step? The mitigation point of entry. Now we can select this bearish order block, the last bearish candle, as our point of interest right here to execute our order. Perfect. And also we can see this imbalance. For those people who has already seen the video of imbalance, they can note that this is an imbalance. We can put 2 orders here, either to the imbalance or either to the order block, right? Now we just, after find this break of structure, we can wait and see what happens. There are some people that after the break of structure, they start executing the order, start buying this after this break of the structure. So in my case, I like to wait. All right, yeah, let's wait to see what happens. Okay, the price pushing up. This is liquidity. Probably it will be taken later. So close to us. And sometimes the price could even not make the confirmation, and that's normal. It looks like this was this case. It was this case. Perfect. How do we feel about this, guys? We should feel right. Oh, come on, Manuel, but the price just, I mean, we don't either execute any order and we just lose our time. Well, if you, let me tell you, my friend, that if you think that way, we still need to learn a lot of things because we have win enough in today's execution market. First thing that you did properly is that you avoid these traps of liquidity. You waited for the correct confirmation, and more than that, the price of the market that you expected was the correct. That's a lot in comparison to other traders. And look how many, I think it opened to the imbalance. The order opened or imbalance, not the order block, not the order block order, but the balance. Look, so it was actually correct, but we had to wait a lot. So if you see the imbalance, this is the imbalance we put in 5 minutes. It opened the order. Oh, probably here now, or in the broker. But at least this is what we need to see, guys. Correct market execution is this. Being able to wait for the correct confirmation. We did not lose any order here. We were savvy enough to wait for the confirmation. And if our broker allow, we got a really beautiful order here. This is it. Confirmations are just another tool for you not to risk your money, okay? As a traders, our job here is not to earn money, is learn how to preserve our capital, because it's the only thing we have. And if we don't have too much capital, like banks or huge institutions, our job is to execute the best as possible. I mean, the best we can, the best as we can, so we can increase our probability of winning on this. And this is it for today's video, guys. So if you find this actually inspiring, you like the way I teach, please follow me and in my social media. Also in my TikTok, I put all the trades I execute daily. Subscribe to the channel and please share this with other people. Leave me a comment, write me some questions. If you have further questions, I will be so pleased to help you. This channel is just growing. My objective is just to the most people I can, right? With the knowledge I got through this beautiful path of becoming a professional trader, which is still going on, right? As well as you. But probably I'm 2 or 3 steps ahead of you, and I just want to share those things to you so you can do better, much better than I did, right? Perfect, guys. So this is it, and I see you then in the next video. Hope you have enjoyed it.